Um, Good day, good day, good day, good day, good day. How you guys doing? How you guys doing? Apologies for being late. As you know, we are in South Africa. It's a power outage is a bit of a problem, so I had to look for another um, office that I can use where there is at least power. Unfortunately, even where I am, there is no power, so reception is quite bad. But hopefully, the Lord will help us, and we will get through today. We will get through today. Okay. So, how you guys doing? How you guys doing? Where you guys tuning in from? Again, I do apologize for being late. Please forgive me for that. All right. Please do forgive me for that. Is it clear? Okay. Just give me 1 second and then we can proceed. I just want to go on YouTube on my device so I can see if you guys can see me or you guys can see me. Shout out if you guys can see me. Let's keep it cracking. Let's tell me where you guys are tuning in from. Can you guys see me clearly? Can you guys see me? Can you hear me clearly? Please comment if you can hear me clearly. Please comment if you can see me. Please do say we can hear you. We are in South Africa now, so it's really cold today, so I'd really appreciate some fire emojis, you know. I'd really appreciate some fire emojis so you guys can keep me warm. You see how much I love you guys. It's snowing in South Africa today, and here I am, chatting to you guys, sharing the knowledge with you guys. Really love you guys. I really do enjoy loving you guys. Can you guys confirm if you can hear me? Can you confirm if you can see me so we can proceed? All right. Let's just wait for more people to tune in. Let's wait for more people to tune in. Let me put this on my WhatsApp as well. Let me put it on Telegram. Make sure everybody is tuning in. We are live. Let everybody know we are live. We are live on YouTube. Let everybody know. Oh, how you guys doing? Hope you guys are doing great. We are live on YouTube. Free webinar. There we go. More people coming in. Where are you guys tuning in from? Where are you guys tuning in from? Do let me know when you guys are tuning in from. All right. So I assume you guys can hear me because nobody is saying they cannot hear me. So I do assume you guys can hear me. Let's proceed with today's session. Welcome to workshop 2. My name is Isaac Izy and I am in partnership with OctaFX, bringing you all this massive great information workshop. I can't wait to share with you guys what we have in store for you today. So just before we proceed, I just want to put a young disclaimer there that any opinion, any news research, or prices analysis, or other information discussed in this webinar or linked to this presentation is provided as general market commentary and does not constitute as investment advice. Okay, just wanted to get that out of the way before we can proceed. All right. And again, thank you guys for joining us. Thank you guys for joining me on today's session. And as it is a norm, if you attended the previous session, you would know that we gave out a 100% bonus for all our participants. Even today, we are doing the same. You guys will get an opportunity to get 100% deposit bonus after attending these lessons. Okay, so you will get 100% first-time deposit bonus on all your first-time deposits. So if you deposit $500, you will get $500 as a bonus. So just make sure that you stay until the end of this webinar so that you can get the promo code to use so you can get yourself 100% bonus. And on top of that, we're also going to give you a trader's guidebook in PDF, of which you will receive in a follow-up email once this is over. I hope you guys are doing great. I hope you guys are excited about that. I am excited. Let's keep the fire emojis in the comment section. Let's keep them coming. Let's keep let's keep it coming. Let's keep it coming. Let's keep it coming. Let's keep the fire emojis coming. So I know that you guys can hear me. I know you guys that are keeping warm in this snowy weather. And tell me where you tuning in from. Tell me where you tuning in from. Daramix Tech is tuning in from Nigeria. Palisa is tuning in from Soweto. Hi. Shout out. Where in Nigeria are you from? Say, where in Nigeria are you from? And Palisa, where in Soweto are you from? Where in Soweto are you from? So tell me. All right, where in Nigeria are you from, Daramix? All right, and again, before we proceed today, I would just like to introduce myself for those of you who do not know me. My name is Isaac Izy. As I've mentioned, my name is Isaac Izy. I'm your conductor for the day. I'll be conducting this beautiful, amazing webinar, informative webinar, so that you guys can have an urge in the Forex market. Okay, so as I said, my name is Isaac Izy. That's what I'm known as. I am a professional Forex trader with over 10 years of experience in the Forex market. I am a founder of Flexi Forex Trading College, and Flexi Forex Trading College has trained over 5,000 students since our inception date. Okay, and I'm also a speaker, and I've held more than 300 Forex seminars throughout the Southern Africa. In Botswana, I've had seminars in Mozambique, I've had seminars in Lesotho, I have seminars in Namibia, all of these places, and I cannot wait to visit you guys in your own countries as well. If you're not from any of these countries, I see we have my brother from Lagos. Shout out. I see we have my brother from Nairobi, Kenya. I see we have Tsiki the Tandile Tsitikama, Eastern Cape. We have Palisa from Soweto in Zondi too. All right. No, that's great. G. Happy to have you. And as I said, we've had more than 300 Forex seminars and counting. I'm sure by the end of this year, we would have added more seminars. We are in plans for that as well. So stay tuned for more information on that as well. Okay, so my passion is to provide new traders with proven strategies that empower them to succeed. If you have been following me, if you've been following me for the past year, you know that my passion is with the people. I am passionate about helping people become better version of themselves. I'm passionate about helping people become financially free through the Forex market. I'm passionate about giving people an opportunity to create an extra source of income through trading the Forex market. Okay. So that's what I am passionate about. And today we will be talking about um, we're talking about the content, the advantages of the forex market. We'll be talking about trading sessions. We'll be talking about when to trade the forex market. I'll give you guys the gist of the forex terminology. So I'll tell you guys more about leverage. What is leverage? Okay. We're gonna talk about take profit and stop losses. If you attended our webinar last week, you would know that there were questions regarding this, regarding leverage, regarding stop loss. Forex terminology, the jargon that we use. People were asking me, when can you trade forex? So today we have all these answers for you in partnership with OctaFX. Okay, so before without wasting any time, because we are already late, so just give me 1 second. Okay, there we go. Before we waste any more time, let us proceed with today's session. Okay, so we're gonna talk about the advantages of forex market. We're going to be talking about the advantages of forex market. You could be there and asking yourself, well, I hear about this forex, people are always saying forex this, forex that, but what are the advantages? Why should I take out my time and try to study this thing and learn about forex trading? Why I can't just focus on my job or focus on my business? That's what I'm here to answer today. So I'm going to give you the advantages of forex trading. There are various markets. There are various advantages for traders looking to make profit from currency trading. Okay, I'm going to discuss about 7 of them today. Okay, I'm going to discuss about 7 advantages of trading forex. Number one, the number one advantage of trading the forex market is a high liquidity. All right, high liquidity. The forex market is the largest financial market in the world with over 7 trillion traded daily. The high level of liquidity means that traders can easily enter and exit positions without worrying about finding a buyer or a seller. So the forex market is the largest financial market in the world. It has the highest liquidity, daily liquidity of about 7 trillion US dollars. So that's one of the advantages. So it's easier for us as a retail traders to jump in and out of the market without worrying about where the money is going to come from there, because there is that such a big amount of liquidity in the forex trading market. Okay, the second advantage of trading forex is time flexibility. Time flexibility. The forex market opens 24 hours a day, 5 days a week. Okay, opens 24 hours a day, 5 days a week. That means even if you also have a business or you have a 9-to-5 job, you can still be able to access the forex market outside of your working hours. At night, like even now, most people have knocked off, the market is still running. So that's one of the advantages. It allows traders to participate in trading activities anytime they want. This flexibility is beneficial for traders who have other commitments and cannot trade during regular business hours. So time flexibility. Like for instance, I like trading in the early morning of the day. So the time is flexible. I have other businesses as well. Even though I am focused on those other businesses, I can also come back at any time to get an edge in the market and still be profitable without my trading affecting my other business. All right. And number 3 is volatility. All right, the forex market is highly volatile due to the constant fluctuation of currency prices. This volatility provides traders with numerous opportunities to make a profit from short-term price movements. So because of the high volatility of the forex market, it's easier for you and I as retail traders to be able to jump in and out and be profitable, because the price of currency pairs are always fluctuating. So even with that high volatility, it gives us an edge or an advantage for us to be able to jump in and out without having to wait for longer periods of time, like when you're buying stock and shares for them to grow over time. With forex trading, it's very different from that. You can jump in and out. You can take advantage of the volatility of currency pair. So that's the third advantage that we have. And number 4 is various tradable instruments. Various tradable instruments. All right. Various tradable instruments. What does this mean? All right, this means that the forex market offers a diverse range of currency pairs and other financial instruments such as commodities, indices, stocks. All right, this variety allows traders to diversify their portfolio and reduce the risk of exposure. Are you guys with me? Are we together? So you have an opportunity, you have an advantage of trading various instruments. With OctaFX, you have over 100, I think it's over 200 instruments that you can choose from. You can choose between currencies, you can choose between stocks, you can choose between metals, you can choose between commodities. You can trade the Nasdaq, you can trade the Dow Jones, you can trade all of these markets. All right. You can trade all of this markets from. That's one of the advantages that you have when trading the forex market. Okay, and the number 5 advantage is zero or minimal commissions. Okay, zero or minimal commissions. So unlike other financial market, forex brokers typically do not charge commission fees. Instead, they make their profit from the bid and the ask price, or they make their commissions from spread, which is the difference between the buy and the sell price of a currency pair. Does that, guys, make sense? So if you are an investor like I am and you're investing in stocks and shares, you will know that there is a performance fee, or there is commissions that you will pay your broker if you are or your bank if you are investing in all of these if you're investing in all of these stocks or shares. But then with forex trading is slightly different. So a lot of brokers, including OctaFX, they do not charge you any commissions for trading with them. They only make their commission, they only make their profits from the bid and the ask price, which is what we call spread, which is something that we've discussed last week. Okay, and number 6. Advantage number 6 is the leverage. The forex market offers traders the opportunity to use leverage, which allows them to control a larger position than their account size would normally allow. This can increase potential profits, but also carries greater risk. All right. So think of it this way. Leverage is, you guys there a bit. Can you guys still see me? Okay, I presume we are back online. Can you guys confirm if you guys can see me? Can you please confirm if you can hear me? Can you please confirm so we can proceed? Can you guys confirm, please? All right, great. I just got confirmation. I just got confirmation that you guys can see me. Okay, great. So as I was explaining leverage, so the advantage of the forex market is that it gives you leverage to trade commodities or stocks or even currencies that you wouldn't normally afford to trade because we do not have big amounts of money. So that's basically one of the advantages that you get, that even with $100 you can still be able to access those stocks that you wouldn't normally be able to access without the liquid cash or without the funds. Okay, I hope that makes sense. That's one of the advantages of forex trading. All right, so you don't need big amounts of money to be able to trade. You can trade from as little, with OctaFX you can trade from as little as $25. See how little that is? $25 is about 500 bucks in South African rands. So Yes, that's one of the advantages of the Forex market. Okay. And the last advantage is that you have a demo account. All right. You can, with Forex trading, you can practice on a free demo account. So for you to get an edge in the market, you really don't have to put in money and practice with your own money. You can start practicing with the demo account. So many forex brokers offer free practice accounts that allow traders to try out their trading strategies and get familiar with the platform without risking any real money. This is an excellent way for beginners to gain experience and confidence in their trading skills. So this is one of the advantages of forex trading. Okay. So yes, those are the 7 advantages of forex trading. There are other advantages, like forex trading offers you is one of, in my opinion, is one of the best professions in the world because you can trade anywhere in the world. All you need is internet access and a smart device. There is potential for great returns, but it also carries a huge risk. So these are some of the advantages that you have if you want to trade forex, or you want to have forex trading as your, what you call, as your extra source of income. Okay, so now let's get to the next one. All right, let's get to the trading sessions. All right, when to trade forex trading. All right, so as we mentioned before, that currencies are traded 24 hours a day, 5 days a week around the world. Trading markets opens Monday morning in Wellington, New Zealand, and they stay open till Friday night in New York in the United States of America. All right. Each trading day can be divided into 3 trading sessions depending on the financial center active during a specific period of time. The time each session opens and closes at is based on the local business hours. Okay, so as we see here, we have 4 trading sessions. All right. We have 4 trading sessions. We have the Sydney session, we have the Tokyo session, we have the London session, and we also have the New York trading session. All right, are we guys together? Are you guys with me on that one? All right, are we together? So the Sydney session it opens at 10 p.m. and closing time is 7 a.m. The Tokyo session opens at 1 a.m. and it closes at 10 p.m. The London session opens at 8 a.m. and it closes at 5 p.m. and the New York session starts at 2 p.m. and closes at 11 p.m. These times are listed in GMT plus 1, what you call time zone. The forex market opening and closing hours will change in March and November as countries may move to daylight saving. Okay, so can you guys understand the trading sessions? Can you guys understand the trading sessions? Are you guys good with that? Give me fire emojis. Give me fire emojis. Give me fire emojis if you can understand before we proceed. Give me fire emojis. Okay. So as we proceed, we're going to talk about when to trade the forex market, when to trade the forex market, right? So other than weekends, there are just 2 public holidays when the forex market is closed, and that is Christmas and New Year's Day. So that means from the 2nd of January till the 31st of December, the only holidays is the 1st of January and the 25th of December. Those are the only holidays where the forex market is closed. Other than that, the forex market is open throughout the year and weekends. All right. Is it possible to get a recording of this session as I'm struggling with network? Yes, that is correct. The session will be uploaded on the OctaFX YouTube channel. You can click on it right now and subscribe and hit the notification button so you can get notified with more webinars. Next week we'll have another webinar which I'll tell you more about it at the end of this session. So as I was saying, the only times that the market, the forex market is not open is during weekends, is during Christmas, and during New Year's Day. Other than that, the forex market is open. Okay, opening and closing times are based on local business hours, with the most business hours starting somewhere between 7 to 9 a.m. local time, depending on the session that we said before. All right. So number three is the forex market opening and closing hours will change in March, April, October, and November as countries move to daylight savings. Japan doesn't observe daylight savings. So daylight savings, in simple terms, is you will notice with the session. So instead of the session to open at what you call at 2 p.m. like the New York session, it will open at 3 p.m. So it'll just be an hour later, and then when it's out of daylight saving, it will come back to the normal hour. Okay, so it's important to trade when at least two sessions are open because the market tends to be volatile at that time. All right, so again, this is my personal opinion. The best time to trade or the best sessions to trade is between the London session and the New York session, because at that time these are the largest financial markets. These are the so they are volatile at that time because they are open. All right, so it's important to trade when these two are open, between the London session and the New York session. But also even the Tokyo session or the Asian session, it's also nice for you to trade within those if you do not want to trade during volatile markets. All right, depending on your trading style. All right, are we together? Okay, cool. So now let's talk about the London breakout strategy. All right. So the London breakout trading strategy is a popular strategy used by traders to identify potential trading opportunities during the opening of the London market session. This is the London session is the session where we as retail traders we say that the market is choosing the direction. All right. So if they break out on the upside, we know we are bullish for the day. If they break out on the downside, we are bearish for the day. Okay. So the London range, the trading range established by the market before the London market opens, it is the trading range of the Asian trading session. The support and resistance level at this period are the key levels for setting your buy stops and your sell stop orders. Does that make sense? All right, so I'm gonna show you guys before how to set buy stops and sell stops orders. Okay, as I said, the breakout of the London session tells us where the direction of the market is gonna go. All right, so overlapping with the late Asian session and the New York session, the London session accounts for a major chunk of forex transaction each day, and thus presents the highest liquidity and volatility, which traders try to take advantage of. One way traders do it is to trade the breakout of the day's trading range prior to the opening of the London trading session. The London breakout strategy, therefore, is a trading strategy that seeks to trade the upward or the downward breakout of the day's trading range that's formed before the opening of the London session. All right, this breakout usually happens within the first 3 hours into the London session. If the breakout is to the upside, traders take long positions. If it's to the downside, traders take short positions. Are we together? Are we together? Yes. So you guys understand that. So the London session usually dictates the direction of the day. All right. So the London open breakout strategy works due to many different reasons. The most common reasons are as follows. The Asian session is usually the least volatile session. As I said before, that the market is not too volatile during the Asian session. So the market ranges. Okay, so when we say the market is ranging, we just say the market is moving sideways. So it's not going up, it's not going down, it's just moving sideways. And we'll discuss that when we talk about market trends. Okay. So given that a breakout on either side of the range is expected when the more volatile London session opens, all right? So retail traders tend to put their buy and sell stops above and below the Asian trading range in the anticipation of a breakout, all right? So what happens is, let me just quickly open my charts. Let's just quickly open the charts. All right, so remember the demo that we opened last week. So I was showing you guys how to open. So when we say the market is ranging, we basically, you see how the market was moving sideways there. All right, so the market was not going up, it was not going down. So if you look at, I'm just gonna put a triangle there. If you look at this area, the market has been just moving in within those support and resistance area without taking direction. Okay, so we're gonna get to that so I can show you guys how to use how to put your buy stops and your sell stops, all right, during the London session. Are we together? All right. So overlapping the New York market, the London market is where the bulk of the day's price movements happen, and it sets the tone for the day's trend. So as I said, whatever breakout, and again, let me say this is not usually the case 100% of the time, but remember, trading is a business of speculation. So most of the time, the London session does decide the trend of the day of that particular pair. So if you break on the upside, we are going bullish for the day. Bullish, which means we are buying or we are going long, and then bearish, which means we are going short or we are selling the market. All right, so now without wasting time, let's just say between these two, as you see, there's a support and there's a resistance. All right, do you guys understand? So let me just quickly put two lines there. We have the market ranging between these two lines. All right, between these two prices. Do you guys see that? So how does one set a buy stop or a sell stop order? So it's pretty simple. Let's say this is the London session. So what we're going to do is you're going to right click there, because we do not know which direction it's going to take. So you want, if the market goes to the upside, it goes up with you. If it goes to the downside, it goes down with you. So what you will do is you will right click here, and then you'll see it says sell limit. All right, so you don't want a sell limit. What do you want? You want a buy stop. All right, so what we're going to do is we're going to open a new order. Where do we go? Just give me 1 second. So we're going to go to tools. So you see the price there is 0.900220, and then you say the type of order that you want to do is you say pending order, and then you choose the type of order, which is a buy stop, and then we'll set it at price 0.90020. Okay, let's just say 2.5. all right, so when it breaks out of that channel, and then you place it. All right, okay, our buy stop has been set. So if the market does go up and reaches this price, automatically the market will open and continue going up. So if you want to put a sell stop, what we will do is we will again go to tools, or you can go to new order, all right, or press F9, and then you select pending order, and then you select sell stop, and then you select the price. The price is 0.89182, of which it's not going to allow me because the market is already below that. So you see, so what I want to do now is basically I'm just going to go on a higher time frame and look at a price that is lower than our current market price. Okay, I'll use let me use this price over there. All right, so I can show you how to set a stop, a sell stop. So that price is 88215. Okay, we go to new order, or we press F9, and then we select pending order, we select sell stop, and then at price 0.88215, and then you place. All right, please wait. All right, does it make sense so far? There we go. Does it make sense so far? Our sell stop. So if the market reaches this and continues going down, we will be in a profitable position. All right. Are we guys together? Hope it makes sense. All right. So as we said, the London breakout strategy is we basically look at the Asian this is my Wi-Fi. Okay, we basically just look at the Asian range, all right, based on the trading sessions that we discussed, and then we say, okay, now where is the breakout? All right, are we together? Can you guys understand? If you understand, please do give me what you call. Do give me fire emojis. It's snowing in South Africa today, so give me fire emojis. 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 All right. All right. Fire emojis, guys. I'm waiting for fire emojis. Fire emojis. Fire emojis. Let's go. Let's go. Okay, let's go back to our. Let's go back to our presentation. Let's go back to our presentation of the day. Again, I do apologize, guys, for the slow network. As I said, we have power out. Sure, it's hot. Oh boy. All right, can you guys see me? Can you guys hear me? Can you please confirm if you can hear me? Can you please confirm if you can see me? All right, great. I just got confirmation that you guys can see and hear me. All right, let's proceed. Let's proceed. Forex terminology. All right, so number one, we're going to discuss what the most common Forex terminologies or jargon. You'll hear someone saying, I am going long. Going long just simply means I am buying the market or the currency pair. All right. To go short means to sell the market. That's what it means. Nothing, scientific. We're just saying you're going long or you're going short, or you're shorting the market, or you're shorting, or you are longing the market. All right. Very bullish market, a market that is moving in an upward direction. A bullish market is a market that is moving in an upward direction. A bearish market is a market that is moving in a downward direction. So if I say Euro USD is bearish, that means Euro USD is dropping and it's selling. If I say USD CHF is bullish, it means the market is going up, or we are buying, we are longing, right? Bulls just basically means buyers. Buyers in the market are called bulls, and the reason for that, just to give you a story, if you know how a bull fights, you will notice that a bull fights from downwards going up. So it will take its head down and push you up. That's how it fights. That's how a bull fights. So in that instance as well, in the market, when we say bulls, we mean the buyers, because you are going from a downward position going up. All right. And if we're talking of bears, if you notice how bears fight, is they'll fight downwards, from up down. This is how a bear fights, right? This is how a bear fights. So we say the bears are going from up, a higher price, to a lower price. The market is selling, or bears are simply sellers. All right. So if you hear someone saying the bears are kicking in, or the bears are too strong, it just basically means the market is selling. It means there's more sellers than buyers in the market. Similarly, if the person says the bulls are too strong, it means there is more buyers than there is sellers in the market. That's basically what it means. All right. A ranging market is a market that is either moving upwards or downwards. As I explained earlier, is the market that moves sideways. It's not either in an uptrend, it's not even in a downtrend. Like as I was showing you the London breakout strategy, it is just moving sideways. That's what a ranging market is. We say the market is ranging, it's just moving sideways. It hasn't decided if it's going to go to the upside or it's going to go to the downside. Okay, a trending market is a market that is moving in a specific direction. So if a market is not in a sideways or is not ranging, it's either in an uptrend or it's either in a downtrend, and we say the market is trending. So if it's going in an upward direction, the market is in an uptrend, so it's trending up. If the market is in a downward direction, the market is trending down. All right. And hawkish is when the CBN is in support of raising the interest rates to fight inflation, even to the detriment of economic growth and unemployment. This is one of the Forex terminology. And another one is dovish, is when the CBN is in support of cutting the interest rates to favor economic growth and employment. All right. And then on the right here, we have currency nicknames. All right, the number one is USD, which is the United States dollar. It's called the greenback. And then we have the GBP, the Great British Pound, which is called the cable. The NZD is called the Kiwi. The Australian dollar is called the Aussie. The CAD is called the Loonie. Oil is called black gold. Are we together? So let's talk about lot sizes now. As I promised you guys last week, we're going to discuss lot sizes. So let's move on. Can you please keep the fire emojis coming? Keep the fire emojis coming. Let's keep those fire emojis coming. So it's very cold today, so I can feel warm. All right. So in Forex trading, lot size refers to the amount of currency units that are being bought or sold in a trade. It is a standardized measure to help traders manage their risk and exposure in the market. Are we together? So last week I did discuss that there are three types of lot sizes that we use, main lot sizes that we use in the Forex market. One is the standard lot, the mini lot, and the micro lot. A standard lot is equivalent to 100,000 units of a base currency. A mini lot is 10,000 units of the base currency, and the micro lot is 1,000 units of the base currency. And how you see this? You see that when you're selecting the lot size that you're going to use, you'll use a 0.01 as a micro lot, you will use a 0.10 as a mini lot, you will use a 1.0 as a standard lot. Are we together? Choosing the appropriate lot size depends on a trader's risk tolerance and account size. A larger account may allow for trading with standard lots, while smaller accounts may be limited to micro and mini lots. The lot size also determines the pip value, which is the smallest measure of price movement in Forex trading. Are we together? All right, so going from there, we're going to move to leverage so you guys can understand what leverages are. But before we get to that, all right, before we get to leverages, okay, so here's what an example of lot sizes are. So one, you'll have three traders brought currency pair with a standard mini and micro lot respectively, with a 20 pip move in profit. Here are the respective rewards. So for instance, if you used a standard lot and there was a 20 pip move in profit, that means you would have made $200. And if you used a mini lot, which is a 0.10, that means you would have made $20. And if you used a micro lot, that means you've only made $2. Same trade, same movement, same pips, same entry price. The difference is the lot size that we use. So the bigger the lot size, the more return you have. But also again, you are limited by your account size. So the bigger your account, that means the more money you could make, because you now have an opportunity, or you are you have the leverage to use a bigger lot size like a standard lot. Okay, are we together? So let's move on to leverage. Now, leverage is having the ability to control a large amount of money using none or very little of your own. That's what leverage is in business. Example, you have a starting balance of $1,000, all right? And then you have a leverage of one. There's different leverages that you can choose from. So 1:1, that means your buying power is 1,000 units, all right? Does that make sense? And if your leverage is 1:10, that means your buying power, you now, instead of 1,000 units, you can be able to buy 10,000 units still with the same amount of money. And if 1:100, that means you can buy 100,000 units. That's your buying power. That's what leverage gives you. And if your leverage is 1:500, that means you have the buying power of 500,000 units. Doesn't make sense. Yes, your starting account is $1,000, but leverage allows you to buy more units than what you would initially buy with your $1,000. Does it make sense? Are you guys with me? Hope you guys understand what we're talking about. All right, so OctaFX does offer, I think, 1:500 leverage. Okay, so do take advantage of that. I prefer to use 1:100 or 1:200 max, because that allows me and gives me the discipline to be not to over leverage my account. All right, so the higher the leverage, that means you can open more trades. So if you're a person that's like me, likes to take risk, you can set those measures that forces you to adhere to risk management principles. Okay, so I prefer 1:100 or 1:200 maximum, so that I don't over leverage my accounts and I give my account room to breathe. And you will know, if you've traded before, the worst thing for a trader is for you to be correct in your direction or your predictions, and then the market goes against you to blow you out and it still goes into your direction. That is the worst thing that can happen to a trader. So please make sure that you take that into consideration as well when you're choosing your leverage. All right, are we together? So now let us talk take profit and stop loss. All right, so here's what a take profit is, what we usually refer to as TP, and a stop loss, what we usually refer to as SL. And why do you need take profit and stop losses? All right, are we together? So a take profit is an order sent to your broker to automatically close an open position and profit at your preferred price. It halts any further advance in profits and guarantees a specific profit after a level has been hit. So what this means is that a take profit price is you open a trade right now on Euro USD at price 1.0900, and you, based on your speculation, you say that Euro USD is going to go from 0 or 1.0900 to 1.1000. All right, so that means you're going to have a 100 pip move. So what you will do is you will set your take profit at 1.1 on the Euro USD, which then means if the market gets to that price, that particular order will be closed automatically. Then you take your profit. That's what take profit is. It's a price that you set, that if the market reaches that level price, it should close your profits automatically. Stop loss, on the other hand, is an order that you send to your broker to automatically close an open position in loss at your preferred price should the market go against you. It halts any further advance in loss capital. So just like take profit, this is the opposite. If you are in a trade open position and it's in the losing position, you can set as to this is how much I'm willing to lose, and then you can set your stop losses there, and the market gets there, it will close that order automatically so you don't have to lose your money. Does that make sense? I hope it makes sense. I really hope it makes sense. Okay, I really hope it makes sense. Your most important job as a trader is to manage and preserve your trading capital. If you've been following me for the longest time, you'll know that I always say my priority as a trader is not to make money, but is to preserve my capital. Are we together? So stop loss orders are implemented to ensure that losses won't grow too big. So they limit your losses, and take profit orders are ensure that you make profit from trades should the market reverse. All right. So you ever opened a trade and you didn't put a take profit, the market went into take profit and went into profit and came back, and you are now sitting in losses. Right. So you use a take profit to avoid such instances. Are we together? So now we're gonna go to our demo account, and then I'm going to open a few trades. I'm going to show you how to set your stop loss. I'm going to show you how to set your take profit, and what are some of the methods that you can use to set these take profit and stop losses. All right. So let us go to USD. It's USD. Let's go to Euro USD. All right. So let's look at that. So we're just gonna open a sell position. So as I showed you, there are different ways to open positions. You can either come there, or you can go to new order. So for the purposes of this, I'm using a standard lot. So I'm going to take a sell position. I accept the terms and conditions. You only get to do this once, and then from there it will be automatic. Then let's sell. Right, so we just sold. So one of the most common methods that you can use to set your stop loss, to set your stop losses and take profit on a laptop is to, let me first set the price. Let's say I want my take profit to be at price 1.09719, and then I want my stop loss to be at 1.1000. All right. That's where I want my stop loss to be. So what I could do, one is I could double click on the order, or let me do this. So I could double click on the order, right? And then it opens that, and then you see stop loss and take profit. Then I can manually put my stop loss 1.10009. And then my take profit, I can do 1.09719, and then I can modify. All right. So now my take profits and my stop loss is set. You can see at the running trade, there's my stop loss and there's my TP. That's one way to do it. Another way to do it is you can double click on your trade tab where your running trades are. You can double click there, it will open that, and then you do the same thing as I did before. All right, that's another method that you can use to set your take profit and your stop loss. Another one is you see once I put my cursor there, it says drag to modify. So you can just click on that and then just drag the open price, and then if you see on the far left, it also shows you the amounts of pips and profit. So it says at this 20 pips, I'll make $206. Do you see that? I can either do that and just leave it there, then my take profit will be set. And then my stop loss, similarly, I can say just drag it up. Okay, let me just quickly move that so you can see it also shows me how much losses I will make. All right, so I can just quickly drag that up and down, and it tells me I can make $80 losses. That's basically how to set your TP and your SL. That's how you set your take profit and your stop losses. It's that easy, guys. Can you guys see that? And then you just wait for the market to play out. If it goes up, you are in losses. If it goes down, then you are in profit. That's how easy it is to place a stop loss and a take profit. Are we together? Hope you guys are with me. Okay, so Let's proceed, let's proceed, let's proceed, let's proceed, let's proceed, let's proceed, let's proceed. We are pretty much done with today's session, guys. Thank you guys for joining in today. Thank you guys for tuning in. If you have any questions, please ask in the comment section. All right. And as I promised you guys, we have a bonus 100% can get when you fund your trading account with OctaFX. All right, so use my promo code until the 31st of July to double your deposit. This code can only be used once, and also share the code with your friends and your family so that they can also get the 100% deposit bonus. So the code is Isaac WS, Isaac W